Hello, this is Nataraj Upadhyaya. Welcome to the monthly top 50 mutual fund analysis as on the week ending on July 19th, 2024. This is the weekly report going before the budget session, which is actually happening today on 23rd. So this report to you is coming a bit late. Let us get on with the report. So there has been a 2 weeks of slowdown in the market, reflecting on the averages also for the second week this time. So if you can look at it 1 week return, there are some negative returns in most of the places, except for the top 50 equity funds still showed a positive return. The top 50 equity funds also ended up with a monthly return of 10.06%, which is very good. However, their annual return is subdued because of the churn out in the leadership of the monthly leaders. When it comes to the annual leaders, so they were just okay for the month. Their annual return average came down to 72.47. Entire equity mutual fund universe of 859 equity funds ended up with an annual average of 39.33 because monthly average came down to 2.63 and weekly they were negative. So going into the budget session, there is a kind of a 50-50 chance that post budget there can be a correction. So that sentiment can be seen in this report, which is the week ending before the budget session. Commodities had a positive month, though there was a negative, returns. Overall, at the on the annual basis, it is 20.29, which is had gone up to 30 points earlier. So this is the averages. Let us look at the equity monthly top 50. As you can see, equity monthly top 50 is ruled by IT funds. IT funds have given anywhere between 14.40, all the way down to around 10.58, which is the average. And however, only the 2 funds made it to the green for having above average return from 1 month to 1 year, because most of the IT funds had a very, very under average performance when it comes to 6 months and 1 year. Though IT funds have caught up on the 3-month return averages, they need to catch up with 6 months and 1 year. So they could not make it to the green list. The funds that made to the green list are HDFC Technology Fund with 11.51% return for the month, 18.04% for 3 months, and 14.91% for 6 months. Kotak Technology Fund, again with 11.44 for the month, 20.57 for the 3 months. This is a relatively new fund, so it doesn't have a baggage of the past. Therefore, on a 3 months basis, it has given you 20.57. So Kotak Technology Fund looks a good bet if you want to invest on technology fund at this stage. Personally, I am staying neutral because post budget, I really don't know how the technology funds will perform, because by July end, most of them would have come with the results. So I am a bit wary of those. So I am personally not chasing them at this stage. Let us look at the equity monthly bottom 50. Why do we look at equity monthly bottom 50? Is to look at the negative crossover or negative sentiment change on some of the high performers. So how I do that is I look at all the funds which have below average monthly return within the bottom 50. Then also I look at the 1 year average among them, which is above the average among the bottom 50. So this part is marked in dark uh, uh, black in bold, and monthly return which are below average are marked in dark red bold. So those funds which are showing negative monthly return but above average annual return in the list are Bandhan Nifty 200 Momentum 30 Index Fund, HDFC Defense Fund, HDFC Nifty 200 Momentum 30 ETF, ICICI Prudential Nifty 200 Momentum 30 Index Fund, Motilal Oswal Nifty 200 Momentum 30 ETF, Motilal Oswal Nifty 200 Momentum 30 Index Fund, Aditya Birla Sun Life Nifty 200 Momentum 30 ETF, ICICI Prudential Nifty 200 Momentum 30 ETF, UTI Nifty 200 Momentum 30 Index Fund, Kotak Nifty PSU Bank ETF, Nippon India ETF Nifty PSU Bank BIS, ICICI Prudential Nifty PSU Bank ETF. So this is kind of a warning that maybe the good days are over for these funds. So those who are entering late probably will end up with negative returns for the short term is the message here. Now let us look at equity annual top 50. And here again, there are very few that made it to the green for having above average return from 1 month to 1 year within the top 50. And they are CPSE ETF, Bandhan Infrastructure Fund, LICMF Infrastructure Fund, Franklin India Opportunities Fund. Now let us look at equity annual bottom 50. Why do we look at equity annual bottom 50? Is to recognize if there are funds that are recovering from underperformance recently. So for that, what we do is we look at above average monthly return and below average annual return within the bottom 50, and the funds that meet both the criteria are marked in bold, and they are ICICI Prudential Global Stability Equity Fund FOF, UNESCO India, UNESCO Pan European Equity FOF, Franklin Asian Equity Fund Direct Plan, ICICI Prudential US Blue Chip Equity Fund, Edelweiss Emerging Markets Opportunity Equity Offshore Fund, ICICI Prudential Global Advantage Fund FOF, Tata Nifty Private Bank ETF, Kotak Global Emerging Market, PGIM India Global Select Real Estate Securities FOF, Sundaram Global Brand F Fund, Baroda BNP Paribas Aquaf FOF, Nippon India Japan Equity Fund. Let us take one particular example, Tata Nifty Private Bank ETF, which has given a return of 2.0 for the month, but its annual return is 12.30. None of these funds are recommended for investment at this stage. It is just to understand how the sentiments are changing in the market for certain themes. Next, we will come to hybrid monthly top 50. When we do hybrid monthly top 50, please recognize only the aggressive type of hybrid funds will make it to the top 50. And the one in the green are those which have shown above average return from 1 month through 1 year. They are SBI Magnum Children's Benefit Fund, UTI Aggressive Hybrid Fund, Mahindra Manulife Aggressive Hybrid Fund, Nippon India Multi-Asset Fund, Aditya Birla Sun Life Asset Allocator FOF, Edelweiss Aggressive Hybrid Fund. So if you notice, the annual return among these, the highest is 47.29, which means there has been a churn out of leadership when it comes to monthly top 50. Let us look at the annual top 50. You can see that the top of the list is with 55.64, which is Coin Dynamic Asset Allocator Fund, but did not make it to the green. The one that made it to the green for having above average return from 1 month to 1 year are SBI Magnum Children's Benefit Fund, Mahindra Manulife Aggressive Hybrid Fund, Aditya Birla Sun Life Financial Planning FOF Aggressive Plan, Aditya Birla Sun Life Asset Allocator FOF, Nippon India Multi-Asset Fund, Edelweiss Aggressive Hybrid Fund. The annual return at the bottommost green one is 34.28%. So now we come to the last one, commodity funds. This time at least two funds among commodities made it to the green for having above average return from 1 month to 1 year. They are Edelweiss Gold and Silver ETF FOF, Aditya Birla Sun Life Silver ETF FOF. For the month, highest one was 4.06%, and annually among the greens, the highest is 22.30%. So kind of subdued week for the mutual funds. It is interesting to see whether the post-budget, whether the mutual funds will have better returns or worse returns is something difficult to say. It is a 50-50. Personally, in my case, I did sell some of the equity funds which are showing a change in the trend, including HDFC Defense Fund, just as a risk management. I would say that I have sold 33%, approximately 1/3 of my mutual fund holdings, which are primarily the underperforming funds relatively, as a risk management measure. After the budget, there may be a risk of a temporary correction. So I did wanted to have funds to buy the new leaders after that correction. So I did sell 1/3 of my mutual funds. That is me. I am not recommending anybody to follow me or do the different. So it is just a risk management measure. Though mutual fund investments are for a long term, I do churn out some of the underperformance on a short term, mainly to increase my chances for better annual returns within my portfolio. So I do use these weekly reports and some special reports, which I do at least once in a month for such decisions. So I'm quite curious as to how the budget turns out for the market. So there may be a chance I might come up with a special mutual fund report as to how the budget session has impacted mutual funds. So you may be on the lookout soon. So standard disclaimers apply. This is neither an advice nor a solicitation for mutual fund investment. You need to recognize that mutual fund investments are market risk, cannot be responsible for any data errors that are coming from value research or arising from my own data processing. All your decisions on investments need to be on your own. So you can follow me on future bulletins on any of my social network platforms. The blogs are released on pretty much on Saturday after the weekends. That is on Nats One Corner on Blogger. Or if you want to go line by line on this report, you can go to this blog and pick up that report. And I will see you soon. Thank you so much. Have a good one.